Bitcoin is currently in the middle of a sharp price correction, having recently dropped significantly from its all-time high set just earlier this week, with the price trading down by approximately 8 to 12% from that peak, settling in the $111,000 to $112,000 range as of October 11, 2025. This sudden reversal, which saw the entire crypto market tumble, was a chaotic reaction driven by a combination of a major geopolitical shock and increasing macroeconomic headwinds. The initial bullish run that pushed Bitcoin to a new lifetime high above $126,250 earlier in the week was fueled by strong institutional demand, evidenced by fresh inflows into U.S. spot Bitcoin ETFs, and a debasement trade narrative, where investors moved money into decentralized assets as a hedge against the uncertainty created by the ongoing U.S. government shutdown. This strong momentum led to highly overbought conditions in the market. The abrupt reversal into a slump was primarily triggered by renewed trade tensions between the U.S. and China on Friday. Specifically, President Donald Trump's announcement of a 100% additional tariff on Chinese imports, bringing the total to 130%, and new export controls on critical software, created a wave of uncertainty across global financial markets. This geopolitical shock caused a widespread risk-off rout, where investors rapidly sold riskier assets, including cryptocurrencies, and moved into safe haven assets like U.S. Treasuries and gold. The reaction was immediate and brutal. In just 1 hour, over $7 billion in leveraged positions were wiped out, contributing to the largest single-day crypto liquidation wave since April, totaling over $10 billion in a 24-hour period across the market. Bitcoin initially sank more than 12% in the wake of the announcement. Adding to the pressure are mounting macroeconomic concerns, particularly rising U.S. inflation expectations, which reached their highest level in 3.5 years, complicating the Federal Reserve's path toward interest rate cuts. Sticky inflation increases the likelihood that the Fed will keep interest rates higher for longer, a scenario that typically strengthens the U.S. dollar and negatively impacts high-growth, high-risk assets like Bitcoin. Institutional investors have also been observed taking profits, with ETF outflows signaling that major players are choosing to sit on the sidelines as they wait for clearer signals from central banks and Washington. While analysts generally view this pullback as a healthy pause or technical correction after a major run-up, the high volatility is expected to continue in the near term as the market digests the escalating trade war and monetary policy ambiguity.